Hey, welcome back to Everything Money. If this is the first time you've ever clicked on this channel, we welcome you in. I'm Seth, your handsome debonair host. I'm here with Mo, not
Hello.
Paul.
Not Paul.
So Mo is here today. Paul is in Barcelona.
He is.
And so you will not be chastised or reprimanded for your investments during this video.
I'm not going to tell you to slam your head in a car door.
But and also, this is not a very polarizing stock, Mo, but it's been requested a lot. Yeah, this is a boring one, which is sort of right up our alley. This is Kraft Heinz. Mo, everyone uses this.
Everyone.
How would I say this, Mo? When we watch hype YouTubers, when it's convenient for them to mention Warren Buffett, they love to. But if you listen to Warren Buffett, he talks about buying really great established companies, not new pre-revenue companies.
Right.
He talks about buying them at a super low price in terms of the stock price,
Right.
And which Kraft looks incredibly low in comparison to its past.
Yeah.
And he talks about the simplicity of companies like See's Candy or Coca-Cola. You know, the idea of like, I don't see Coca-Cola, I don't see Kraft Heinz going away.
Correct.
The brand that our grandparents have fallen in love with.
It's literally an American staple.
Absolutely.
Yeah.
Picnics, 4th of July, ketchup and mustard, the relish, it all goes together with Kraft Heinz. But this company's just strange, So Warren Buffett, Charlie Munger, Berkshire Hathaway, they own 20 some odd % of this company. They've expressed their displeasure in some of their moves. We've had write-downs in the past. And just 4 years ago, this was trading at $95. It's down to 36. One of these companies that Paul always says, if I would have told you years ago this would be, 30% of what it used to be, you would have said I'm nuts. And sure enough, here we are.
And looking at this isn't even like a hype company. Even looking at a company like Kraft Heinz, it literally doesn't get much more boring than Kraft Heinz. And they went through these kind of issues. So if you think that big, crazy hype stocks are not going to go through this, they are.
They're trying to, do the sugar-free, maybe move toward a more organic thing. I'm sure that's tough with just the sheer volume of what they have. But I love all this. I love the ketchup on everything. We know Paul puts it on his filet mignon and his chicken, which is so disgusting. Now, I prefer ballpark mustard, and that you guys can argue with me in the comments below. But in essence, we're going to use our 8-pillar analysis to look at the fundamentals behind Kraft's. Could this be a potential buy, considering the stock price is just been so down of late? And so we'll move into looking at the fundamentals. What do they make? Where are they going? Typically, as value investors, we want to buy $1 for 50 cents. So let's see what Kraft is doing. It certainly looks cheap in comparison to its past, Mo.
Sure does. It sure does. But let's see if that's actually true. Let's start.
The market cap for Kraft Heinz is $44 billion, Mo.
$44 billion.
Okay, Mo, so pillar number 1 is our 5-year PE average. We want this less than 22.5.
Right now, it's sitting at 41.5. And what that is the current market cap divided by the 5-year average of earnings. And it's almost double. What we want to see? We want to see less than 22.5, like you said.
Now, I'm shocked that this thing is so beat down and the PE is still pretty high. That's
the 5-year average PE is pretty high. I mean, yes, that's why we're going to run Stock Analyzer tool and actually see it's not all about price. Just because this thing was basically cut in half doesn't mean that it's a value play yet.
Pillar number 2 is our 5-year return on invested capital, or ROIC. We want this greater than 9, Mo. What is it?
Yeah, it's sitting at 2.4% right now. And again, they sell things. It's retail. That could be why it's a lot lower. This is maybe why you want to go and do some digging and see what they're investing in as a company to grow themselves.
Pillar number 3 is revenue growth over the past 5 years. You can see all this on the Everything Money software, Mo. Go ahead.
Revenue growth over the past 5 years. So 25.9 to 26.39. They are growing, so that's a check. They did have an increase, then a decrease, though. So I would say that they're more consistent. It is a check, but to me, this is looking like a company where you really need to go start digging into the 10K if you're interested.
Pillar number 4 is our net income over the past 5 years. Mo, what do you got?
Yep, net income over the past 5 years, they were 2.37 to 2.17, so it's an X, and they've had some years in there where it has been a little bit rough for them. They had negative income, net income for those couple years.
Yeah, so in 2019, that net income of minus $11 billion, something strange had to happen there, right?
Yeah, I'm sure that there's something in there where you know what? That's the write-down year. That's the write-down year. So that is exactly why that's great to see that anomaly, because they were growing, they got drilled, and now they're kind of coming back, but still not to that 2017 level.
Yeah, what they're talking about is on February 2019, Kraft Heinz took a $15 billion write-down on its natural cheese, Oscar Mayer, cold cuts, and Canadian retail businesses. And this is when Warren Buffett got a little upset with them during their annual meeting, Berkshire Hathaway.
I remember the day that happened.
Oh, yeah.
I do. I remember the day that happened, yeah.
Well, pillar number 5, folks, is shares outstanding, Mo. Are they selling or buying back shares down there?
They are an extremely consistent company. So they basically doubled their shares in 2016, but since then it's just been extremely consistent. 1.22 billion. Haven't changed it. Haven't added. Haven't diluted you at all.
If looking at these numbers speaks to you, you can join the Everything Money community at everythingmoney.com, formerly Patreon. Our new tiers on everythingmoney.com, you can join. Our $27 a month tier gets you access to Discord, that growing community of like-minded investors to help you make decisions. And you can also join Mo in the Bidden Nation. It's $77 a month. These go up every single month, folks. So go to everythingmoney.com and join. You can get the software right now. You will not have to deal with Patreon nonsense of double fees and crazy taxes. All of that goes away at everythingmoney.com. You can get the software and join our community. So Mo, let's get back to Kraft Heinz. Pillar number 6 is total long-term liabilities divided by 5-year free cash flow. And we want this number under 5, Mo.
Right. So their total long-term liabilities right now is $37 billion. Now let's go look at their average free cash flow over the last 5 years. It is $2.12 billion. Seth, can you divide that out for me?
So yeah, Mo, 31 divided by the free cash, a little over 2, is 14.6. We want a number under 5 for this metric.
Yeah. So they have a lot of long-term liabilities. It's not surprising based on everything that I'm seeing from this stock. The only thing that I'm liking so far is the shares outstanding, how they're keeping it consistent. They're not buying back, but they're keeping it consistent.
How about free cash flows, pillar number 7 over the past 5 years, Mo?
Yep. That is this 2.12 billion number.
But last year's good. Look at this one. 4.8 billion last year.
Now, is this an anomaly? Remember. Well, you know what? Let's look at it. So let's go back 5 years. This was a very big jump, and I want to know why. Did it have to do with COVID? Because even 2019 to 2020, that was a big jump. I mean, so dig into what these jumps are. This is a stock where if you want to own it. To me, I'm looking at this and saying no chance. I'm not even doing any due diligence. But if you want to own something like this is where you really need to go in and understand what is going on.
You're falling out of love with this already?
Yeah, I mean, this is just too expensive for me. I'm already predicting, what's the stock price? $44?
Yeah, so the funny part is, Mo, normally we would take our average free cash. This is pillar number 8, folks. Is we would take $2 billion, multiply it times 20 to get our market cap, which would give us $40 billion. Mm-hmm. And the market cap is $44 billion. I think we're close, Mo.
Yeah, but we're close, but I look at it, all of these numbers. When we get to Stock Analyzer, let's go and put in the projections, because I know I'm going to have to be conservative on this, because how much more can this company grow?
So, Mo, we look at our 8 pillars from the Everything Money software, and it's fairly ugly. Mm-hmm. I'm shocked to see how this is still sort of overpriced and not in our buy wheelhouse. But go into the Stock Analyzer tool, Mo, and show us some assumptions we can make about what we should be paying for this stock.
Right, so this is a 7-year analysis that I did. Revenue growth, I kept it pretty conservative, and I'm doing conservative estimates here because the company is so large. How much can they actually grow? And they've had a rough go as of late. Maybe they're restructuring, I don't know. But my low-end revenue growth was 2.5%. I went to 3.5%. Share change, I kept it at 0. I did put in there that they would buy back 0.5% per year if they choose to do that, because I think it's probably more likely that they're going to buy back shares than dilute shareholders. Profit margin, 4%, 5%, and 6%. I'm just going based off of the last 10 years. PE, I put in, actually, my PE is kind of high, actually. 15, 18, high side 20. This, to me, is not a 20 PE. This is a company where the highest PE I would want to see there is probably 18%. Desired annual returns, I want, if I'm going to buy a company like this, I want to see 12, 11. I want a minimum of 10% return on this thing.
Or I wouldn't just buy it at all. I mean,
exactly right. There's better options out there. So here's my prices. Basically, $11.25 to call it $25.
Yeah, so what this means, folks, if you want a 12% return over the next 7 years every year, you need to be buying this stock at a much lower price. It's currently 36. It looks like you need to be buying at 11. Yeah. And even on the high price, it's out of the wheelhouse for buying the stock. I'm kind of, I'm shocked.
Even if this thing got to $11, I still would want to be like, what is going on here? What's their path forward? What do they want to do to restructure themselves and get growing again?
You know, we had done videos in the past about Smucker's, Mo, last year and how they were struggling. And This is one of the pride of Ohio, in Worcester, Ohio, or Orville, Ohio, and they turned it around. I mean, it's a comparable company. They sell peanut butter and macaroni and cheese and all this stuff. And
I will say, a company like Kraft Heinz, I'm not concerned about. I think they're going to figure it out and turn themselves around. It's just going to take time, and then we'll reevaluate. When they get going in the right direction, that's when I will reevaluate on a company.
How about trading Kraft Heinz from a more exuberating, exciting experience?
Question.
How would we trade this?
Right now, it is in a very big downtrend, and I'm going to zoom in here and show you. This thing has been in a downtrend since July. And you can see that it's had big falls. I think this was earnings. I think this was just bad news. So it is starting to kind of reverse trend. You see how that red line is just slowly creeping up to the... Wait a second. Nope, I'm looking at the wrong stochastic. My bad. So this thing is coming down, and it's coming down hard. If you get an engulfing candlestick and break out under this resistance point of $36, something like that, you can definitely short this thing. I don't think the short is over. Why don't we go and just make sure there's no moving averages in the way? And there aren't. So the reason I'm over on this chart is I want to see these moving averages. I wanted to see if there was a support level there. And right now, we are under all 4 major moving averages. So there's really no support down here. Maybe that $11 number is realistic.
Damn, look at that. I don't know.
But it's crazy. An American staple like Kraft Heinz.
You're definitely right. I can't imagine there's a hype train of excitement around this stock.
Honestly, it's the hype around them probably comes, like you said in the beginning of this video. It comes 4 to 5 times a year when Warren Buffett puts out his holdings and everybody thinks Warren Buffett's a genius.
Yes.
And then he's an idiot the rest of the time.
That's right. That's our take on Kraft Heinz. We're avoiding at the moment, and but we'll keep you updated on this one. This banger stock.
Banger.
I mean, get your oven mitts ready. This is a 10x bagger for sure. Moving forward. So that's our take, guys. Fondle the thumbs up. Join everythingmoney.com, and we'll see you in the next video.
See you guys.
Love you guys.